Is this going to be a temporary top as we head into a recession, or we might not even have a recession? Today, we'll be taking a look at a lot of data as well as the stock market, where the most likely scenario that QQQ and SPY is going to be heading into next week. So we'll be looking at as well the 7 mega cap tech stocks: Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta. So all right, before we get to the technical charts, let's take a look at the data. So earnings today came in decent for most of the banks. They have beat their earnings, and coming next week, we have more banks. And the very first tech stock, that'll be Netflix, and Tesla would be reporting its earnings Wednesday after hours. And we have TSM, so that'll give us more data on the semiconductor sector as well on Thursday morning. And for the economic calendar, we have a couple of things next week, not a lot. Initial jobs claims, Fed manufacturing index, gonna be what I'll be looking at, as well as retail sales. Not that big of a deal for me, but Thursday will be more of a big deal. And AMZN data is still bullish in the 40s, so this could potentially mark the temporary top. While we take a look at the techno analysis, that will show us what the most likely scenario will be. Fear and greed index still 80 at 80, extreme greed, and the heat map you can see today is more of a flat / rotation kind of day. And financial sector felt like a sell news kind of event after the earnings came in, but a lot of the mega cap tech stocks are still holding. And so let's take a look at the charts. So yesterday I talked about how if we have a 3-day gap up, you should very likely play a short. So that's essentially what we got. And you can see in the morning we gapped up and touches 382 support and resistance that we took a look at yesterday. And that resistance was right here, where it was the top of this next structure. So that was the very key resistance here, and we touch it right at the morning, and that would have been a perfect short opportunity. And you could have taken your profit back down here at 379, or you can hold it till next week, because we closed at the low of the day. When we close at low of the day, it just means that sellers ran out of time selling. And if we had more time, we probably would have formed a head and shoulders here and head down to 375. So that's the most likely scenario for me because of how big of a drop this hourly move is. So it's a 1.1% move, and you want to see an hourly trend change from the bears. We're talking about this a lot. If there is no hourly trend change for the bears are not going anywhere. So this is the initial move. This is only one drop. Now we need an hourly candle to go above the prior candle and then go below this right here, this 378.18, for it to be confirmed a hourly downtrend. Right now we are in an hourly neutral trend. It's not a downtrend yet, but this drop is big enough for it to give bears enough room where on the next bounce they can potentially scout that lower high. So at the moment, we'll have to see what Monday gave us, but this might shape up like a head and shoulders. And that confirms we need to break this low today, 379.16, for it to confirm. And that confirms, and it'll be a head and shoulders break as well as the hourly downtrend confirming. Then, if that happens, then we can zoom out to the 4 hours, where we need some 4-hour consolidation. We just got our first hour consolidation because this candle is now below this one. So that's a 4-hour consolidation, but very minimal at the moment. So no signs of any huge red flags yet. Although this is an ugly looking candle on the daily after 3 days gap up, it's very normal for it to sell off, especially how extended we were on the 4-hour time frame. You can see the RSI was at 82 historically. So we don't usually get 82 RSIs on such that often. So a little bit of a sell-off to cool off. It's very, very normal. And let's take a look, see. It's still a bull flag. As long as we hold about the 0.382 Fibonacci level, it's going to be a bull flag. So we'll see bears can actually come from anything on Monday. So like the very first step Keeping saying this forever. Very first step for you bears, hourly downtrend confirm. And would start scouting some shorts. But before that, I'm going to keep following the trend. As long as the hourly, weekly, monthly, daily is all in trend of favor of the bulls, we should not be looking to short swing anything. All right, let's take a look at SPY. SPY, same thing. Big enough drop where the next bounce could shape up that potentially head and shoulders look. Although this is a bit ugly looking head and shoulders, but still the concept means just goes from an uptrend into a downtrend is what a head and shoulders is like for the concept. But so now zoom out and see if there's any red flags. So we did reject back close below the 450, so we're probably gonna get somewhere consolidation due to how much we have been running lately already. So I wouldn't be surprised to see daily consolidation, meaning the next candle will be lower than the prior one. And be perfectly normal if we come back to 443 and then bounce off of the support because it was acting as strong resistance before. So it should act as strong support when we come down here. Obviously, if we blew through it, and that's a red flag for me, then that'll pretend to shape up a daily head and shoulders. If we do blow through that 443 support, then we can bounce and then shape that up, right? So the bulls hold above 443. We are perfectly fine. And the bears want to break below, ideally break below the prior pivot, which is this pivot right here. That would be 437.06. So if you bears can break this pivot, then it's likely a daily uptrend into a neutral trend because we broke the pivot. Obviously, that would be a pretty big drop for SPY. So now, no signs of the yet, because the very first step for you bears is to confirm an hourly downtrend. This is only one single move. Next bounce, I want to see candle above it and then break below the prior low for it to confirm. I know I keep repeating myself on the hourly trends, but as long as bears don't show us even an hourly downtrend, nothing is going to happen on the bigger time frames. All right, let's take a look at Nvidia. Nvidia looking like a blow off top, especially how much it ran, 12% in 2 days. So essentially, it was probably shorts, very likely just accumulating in this zone, thinking that we're going to roll over and fill this gap where that earnings gap is just very juicy gains, and they all got squeezed out once it broke out of this consolidation. Remember I talk about where Nvidia is tightening up, where the next thing where it finishes tightening up, then you can play it. Once it broke out of that tightening range, you just have to add. Next thing you know, it shoots up. If it breaks out of this tightening range, bearish, you just have to short. Always be patient on your trade versus you bang your head over here thinking about which way it's going to go every day. So what's the next likely scenario? It actually huge drop, held its support though. So 450 is psychological support from yesterday's support. And if that breaks, then we'll zoom out into the daily time frame. If 450 breaks, we're going to come back down to fill this gap. Back to this 437. Now it's starting to look even more like a blow off top. 5% drop so far. So if we drop even more, fill the gap, that's a 9% drop. That's quite a bit. So that would actually shape up a pretty darn big head and shoulders if we fill that gap and then break through that. Yeah, that'll be one heck of a blow up top, but no signs of that yet. So we don't want to anticipate too much. Get Dr. Barry's excited. You guys still need to break up that 450. If you guys can't break the 450, then bears aren't going anywhere. 450, even if you guys break 450, you still need to fill this gap because you can see all this resistance back here at this 437. and you guys bulls finally broke out of it. So when we come down to it, it's going to act as strong support as well. And you guys still got 420 to break as well. So, and this is how far the last pivot is. This is where the last pivot is. You're 19% away from the last daily pivot, and the one before that is over here. So as long as bulls keep making higher lows on these pivots, they're perfectly fine. We can drop all the way down here, 420, bounce. Guess what? This pivot is higher than this pivot, so we're still in a daily uptrend. And then bulls can do whatever they want. You know, maybe they'll chop around here, form tightening up in equilibrium again, just like this one. Or we form head and shoulders, go lower. Then that would start shaping like a red flag for me because we're breaking pivots now. That pivots break. But if pivots don't break and daily uptrends keep on continuing, maybe we go to 500 or whatever. We don't want to look at the fundamentals or whatever when we're trading it. Obviously, when we are holding the stock, then that's a different story, right? Where we're holding the stock. Let's say you bought the stock, Nvidia, 3 years ago, and you're looking at the fundamentals right now. And you're like, oh my gosh, this thing is so overvalued. I'm gonna sell half of my shares. So you just sell it and back. You wait potentially once it is a mean reversion, then you can add it back, or you're happy with your profits, right? That's a different story, fundamental versus when we're trading it. When we're trading it, we don't want to look at the fundamentals or think about the fundamentals. This thing can go up to 500 and people can still say it's overvalued. But if the charts keep telling us we are forming pivots every time it goes higher and higher, daily uptrend keeps continuing, we don't want to fight the chart because we trade to make money on the charts, not because fundamental is overvalued or undervalued. All right, so that's a little bit of my rant on Nvidia. So we'll continue to monitor what no support breaks yet, but this is starting to shape up a little bit of blow off top feel for me, especially when we sold off red open and relatively weak compared to QQ today. All right, Tesla. Pretty clear resistance. We've been looking at this resistance 284 for a very long time. So it wasn't a surprise when we reject from this one again. With QQQ being a flat day, Tesla being up 1.25%, that means Tesla has relatively strength today. So no huge red flags for Tesla, even though we rejected initially here. Still holding the hourly EMA. That's a sign. And if it was up 1% today, Tesla would have probably broken this resistance. So no huge red flags yet. And because we're still in an uptrend in every time frame, weekly, daily, monthly, hourly, still in uptrend. So no huge red flags. Tesla chart looks even better than QQQ itself. So as long as the Tesla bulls hold above 275, they should be able to test 284 again. So if we do break that, I'm looking at 295. And if we do break that to 295, probably going to head to this $1 trillion mark, 315. That would be the $1 trillion mark, and that would be coinciding with top of this top zone resistance. All this rejections over here, 1 trillion mark, as well right here, all these rejections. It's going to be a strong resistance when we come to it. The bears, you would first step, give me that hourly downtrend, and then we break this teal looking EMA 12, and then we go under 274 and 262. This is your battle zone here for the next pivot. This is the prior pivot. This is the new pivot. So as long as the bulls hold above this new pivot right here, even if we drop down to here, bounce back of it, we're pivot still above this pivot. Bulls are in full control. So don't fight the bull trend is what I've been saying for past couple months. Just follow the chart, whatever it's trend we're in. And I'll be the first one to let you guys know when I see some bearish chart going, we can start shorting. Everybody wants to short, but As long as we follow the chart, we are good to go. And Apple, pretty much an inside bar today, so not much going on. Even though we broke yesterday's low, not much follow through. So it's probably just tightening up. So we're just gonna go like this and tighten up before it decides, or it just consolidates, bounce around, cool off a little bit for its next move. Before market decides what it wants to do. Usually, that's the best case scenario for bulls, especially when you consolidate at the top of its range. Yeah, if we do just consolidate around here, and then market continue to be bullish. Let's say we only have a mild recession end of the year, where we form a big bull flag, and boom, right next thing you know, Apple is at $200. That could very possibly be happening, but we'll stick to the charts one day at a time. As of now, every trend is in favor of the bulls, except Apple is in a mini daily downtrend. No signs of red flags yet. As long as that 2-day EMA 12 is holding, I am not concerned. Let's just keep on bouncing off that teal looking line on the 2-day time frame. And no signs of it breaking yet. So we'll see. Amazon. Amazon is looking like a mini blow off top as well, but that could just be QQQ being consolidating. QQQ is flat today. Amazon's still up a little bit, although that wick, it's not looking that great. So I said once we broke above this, we're gonna head straight to 136 yesterday. From a video I'm talking about where because there's no volumes here, so it'd be an easy straight shot up to that 136, and we actually got that today. Straight shot up to 136 because of a lack of volume there. So that was pretty interesting. And now the hourly chart is going to be our guide, because now this drop is big enough where bears can potentially scale the hourly downtrend. As of now, we don't have that yet, and we can potentially play this head and shoulders as well. A lot of charts are looking a little bit head and shoulder-ish because of how QQQ opened up higher and closed at the low of its day, which perfectly makes sense. I was talking about this yesterday, where if we had a 3-day gap up, it's very likely a good short. But yeah, we're quite extended either, so a little bit of red day consolidation is normal. All right, take a look at Google. Google outperforming these past couple days, and back to this resistance again. This one that we've been looking at, this resistance zones 125 to 126 zone. And as long as Google is probably going to reject it, I said this yesterday when we touched this, probably going to reject initially and form the lower high to give us a daily uptrend to confirm. So right now, this is just one move. We're not in a daily uptrend yet. We need the next candle to go below it and then break above this high again. So that's the most likely scenario for me. A little bit lower, retest, and probably break if we continue to have market strength. And Google will be back to a daily uptrend. Same thing, hourly guide would be you guys' guide. Hourly is still in uptrends. Everything is looking very solid for Google today compared to other tech stocks. All right, Microsoft. This one is pretty straightforward. You can see right in the morning, we rejected from all-time highs, double top. This resistance was where everyone and their grandma saw it coming, because it's exactly, pretty much exactly from the all-time highs. And essentially we hit it and then it was just sold off. So obviously that would be our next resistance for bulls to break. But for now, we have a big enough drop now where bears have a chance to form the hourly downtrend like most of the other tech stocks that we looked at now. So we'll have to see if the bears are actually serious about bringing the market down a little bit further for some consolidations, because it's due. And consolidation doesn't mean market just going to tank, but it looks just like, let's say, we just had a consolidation back here, right? So right here, from this move to this move, you could have been like, oh my gosh, market is going to tank, right? A 4% drop. It's quite substantial on QQQ. And that was just a daily consolidation because it's just the initial daily move. There, consolidate, boom, higher, consolidate, boom, go higher, consolidate, even if it's a 4% drop. The pivot is still above the prior pivot. Put in a daily uptrend. Another one right here. This pivot is now higher than this pivot. Big move up. So now this is the pivot that we are, our benchmark pivot that we'll be looking at. So let's say bulls drop 4%. We're still above that pivot, right? So say we come all the way down here. Bounce. Guess what? We're still in a daily uptrend, and we are still above the prior pivot. There's nothing for the bulls to worry about. Ideally, we come down to here, this prior high. Is also close to this high, right there. Then bounce. That's ideal for the bulls, but obviously, they don't always trade the way I wanted to. But as long as we hold above this prior pivot right there on this Monday high, it's 363 for 1. Bulls are still in perfectly daily uptrend. So same thing for Microsoft. Even if we drop all the way, this is a 7% move, right? This is one move. So if we come down all the way to here, then bounce, perfectly fine for bulls. We're probably going to form a daily bull flag. All right, let's see where it's going to be. Let's say we drop all the way down to, yep, that 0.382 is perfectly with the coincides with this prior 3, 4, 5 support zone. So the chances of it bouncing is probably pretty high because it coincides with 0.382 plus it was prior strong resistance. Prior strong resistance is going to act as now because we are above that price. So let's say we come down here, bounce, still in the bull flag territory. So we're very likely bounce. This bounce doesn't mean we're going to head all the way up here, but chances of it bouncing be really high. And then after that, we'll have to, nobody knows. We'll see if the bears can confirm anything serious or not. If not, probably retest this double top again, all-time highs. So here from Microsoft, probably forming that bull flag. All right, Meta. Same thing. Meta is just even stronger, and it's probably forming its bull flag. Let's take a look. Yep, still within 0.382. And still holding the 12 EMA. So as long as Meta holds, no huge red flags. It's probably gonna, even if it drops, right? The first thing it wants to test is probably the 300 psychological level. Right here is support because it hasn't retested yet. So all the way down here, that'll be a slightly red flag / blow off top, but bulls are probably going to bounce here slightly. And the bears are serious about this. They will try to form a daily downtrend. Now, zero signs of that yet. I'm just giving you guys a potential bear scenario because other big tech stocks have formed something like this, just like Nvidia. Nvidia looked like it came all the way down here already, right? This is what Nvidia's chart looked like at the moment. No signs of that on Meta yet. So Meta is relatively stronger at the moment. Let's take a look if we have an hourly downtrend or not. You can call this an hourly downtrend, confirming on Meta. And this is a double top here. Call this a triple top. So that can potentially actually map out a temporary top where we come down to test the 300 level. Yep, since it formed an hourly downtrend now, it's burdens on the bears to take this to 300. And I wouldn't be surprised if we come down and test 300 and bounce. Down to 300, this EMA 12 is also going to be probably at 300 on Monday, catching up. So here's where we need to break both the EMA 12 and the 300 level support for another big flush back down to 290. and it will shape up a head and shoulders. So the theme of next week is big tech stocks, head and shoulders. Will it form from the bears, or bulls are going to negate it? That's pretty much the theme of next week. And we'll see. The Netflix and Tesla is going to be reporting earnings, and so we'll get a glimpse of what the tech stocks is going to be looking like. Also, TSM is going to be reporting earnings, so we'll see how the chips are looking like as well. All right. If you did subscribe, you guys made it this far or learn anything, and I will see you guys tomorrow for the natural gas update, natural gas, gold, and silver update on Saturday. And on Sunday, I'll probably do something new, like what I did last week, where I did the $500 a day trading 3x leverage ETFs on how to make $500 a day. So check that video out if you want to learn how to trade leverage 3x ETFs. As well, I'll put the link below in the comment section. And have a great rest of you guys' weekend, and see you guys tomorrow.